to 5 is your time. It's been a momentous day here in South Africa. The South African Reserve Bank are coming through to the market and saying they are taking a big step forward in focusing on the low end of a new inflation target range. Again, the range in itself, a question of debate, but no question about that. We had that announcement coming through from the governor, Lesesha Khanyago. You took many questions. Many views are being expressed. In the studio with me is one view. Freddie Mitchell, Chief Economist, Aluma Capital, joins me. Thank you, Fred, for coming through.
Pleased to meet you.
I want your impressions of the governor's performance today.
I think it was a long time coming. They've been that was mooted in the news that they're going to lower the target of the inflation to 3%, and actually it's been now basically confirmed.
Right.
And there was questions about the legality of that, and the governor actually answered, said the mandate of the Reserve Bank is statuted in the Constitution is to protect the price stability and protect the value of the rand domestically. So it doesn't. How did the governor put it? We're not looking out to protect the value of the rand to buy goods in foreign countries, or something like that line. So yeah.
And in terms of the announcement itself, one of the points when we were discussing earlier with one of your economist colleagues, Annabel Bishop from Investec, was that she thought what the bank does very well is communicate. In terms of communicate that move towards focusing on that low end of the target range, what have you made of it?
I think it's a good thing. It's always good to know where the government or the governing body of interest rates, like the Reserve Bank, is aiming at, because that's it, price expectations within the market. The governor said where you have a lower inflation target or a point-specific point, then prices tend to converge to that point much faster and easier when there's a shock that do occur in the market. So I guess from that point of view, it's quite nice to get some clarity on that.
Yeah.
And the governor also said when you have a higher target and you get shocks, it takes a bit longer to get to that sweet spot of, say, 4.5%. So I guess, in my opinion, it's clearly communicated, which is a good thing again.
Is this the right move, though, for an emerging market economy like South Africa from your perspective? I still want to talk about your view on what was happening today, by the way.
It depends on what's going on in your country or your market for that matter.
Yeah.
And if we look at, say, let's look at the US, where we had the rate announcement yesterday, where they kept rates unchanged. That was widely expected because the Fed said that we were going to see how these tariffs transpire through the market, and then we'll make an assessment in time given labour market conditions and so on. But the US got a different view and instruments that they use apart from interest rates alone to curb inflation once that rears its head, which we do not really have in South Africa to the same extent to lower inflation. They've got rich man's or rich country problems, and we've got say emerging market problems, to put it mildly.
Right. So the move today, are you supportive
of the 25 basis points lowering?
Yes.
Yes. My view was I thought the Reserve Bank would not lower rates because they're also on the hawkish side.
You were amongst 10, I think, amongst the people that were surveyed, but I think it was by Bloomberg. 17 were saying there's going to be a cut. 10 said no.
Well, if you look at what the Reserve Bank has been saying, it's we know the demand in the economy is being relatively flat for the last 24 months or so.
Yeah.
So we've seen some demand returning to the market in May, if I remember correctly, in the retail numbers, which is good news. We saw some uptick in credit demand in the previous week, which is also good. So we see some demand coming back, but from an interest rate perspective, if you look at inflation, it's not demand pull. We don't see too many people and money chasing too few products.
Yeah.
There's no inflationary pressure. Our inflationary pressure that we do see in the country is from external shocks, like you have a volatility in your rand and the oil price that we know of, and also we are price takers. What's happening abroad, they transpire the prices onto us, so ours is more cost related than it's a demand related problem.
So given then that scenario, doesn't that then bolster the case for a cut in order to stimulate that demand?
Yes, I thought the Reserve Bank would also wait and see how the tariffs and the international uncertainties play out a bit, and then make a decision later on.
Yeah.
But like the governor said, we're looking at, if they target a point specific like 3%, we're looking at the 5 interest rate cuts to be at the optimal point at some
The
point.
QPM, yeah,
Yes.
the quarterly projection model. And so, which brings me to my next question, because then I want to ask you, the suggestion I got from the panel that I had earlier was that the governor at the same time signaled that likely, given now the focus on the lower end of the inflation target range, this might be the last cut. I was trying to avoid that.
The last cut.
Yeah, for a while. Or in this cutting cycle.
Well, it's always good for the Reserve Bank to communicate good, like they did, but it's also prudent for the Reserve Bank to have some people guessing what they're going to do, because the uncertainty drives down inflation in terms of your expectation. What do you expect? So it's all about managing expectations, and inflation. We talk about inflation expectations in future. So we expected the Reserve Bank to be hawkish, and they surprised, say, 10 economists to lowering the rates. So that's which is a good thing. But I guess we'll have to wait and see if there's more rate cuts in the future, given economic uncertainty that we know of.
What's your sense, though? Is this it for 2025 in terms of rate cuts?
I don't think so. I think there's still a rate cut or so left in the tank.
Okay.
But I might be wrong, depending on how the negotiations with the National Treasury is going in terms of the new inflation target that they want to achieve.
And, of course, the tariffs that are set to kick in tomorrow. I've been watching the headlines.
That's a difficult question to answer this day, because I guess there's a lot of countries in the global economy that's facing similar problems like we do.
Yeah.
We're not alone in that space. So we'll have to wait and see how that pans out in the South African economy, and how that filters through the various mechanisms in the economy.
Yeah. While I have you, I might as well ask you as well about your focus for growth for 2025. We saw the bank cutting theirs mildly to 0.9% from 1%.
I'm more at between 0.7 and 0.8%.
You're even more
I'm a bit
pessimistic.
more conservative. I'm a bearish economist. I'm just joking. It's like, I'm a bit more conservative. I like to be surprised on the upside.
Yeah.
If we do better than 0.7%, I will be happy.
Well, I hope we do better than 0.7%. Thanks very much for coming through, Frederick. That's Freddie Mitchell, Chief Economist, Aluma Capital, with a take on the bank deciding two things that they did today is obviously that focus on the lower end of the inflation target. And then there's also, of course, the cut of that repo rate to 7%. Lots of commentary about what that means and where potential